Hi, this is Kathy Ann from Evergreen Estates Realty. Welcome to the second part of my Buying a Home series, and that's the financial basics. So in this overview, we're going to talk about down payment, credit, qualifying for a loan, and closing costs. You can afford a home that's about 2 times your proven annual household income. You're going to need a down payment of 3 to 20%. You can increase your buying power, get a bigger loan with lower debt, a larger down payment, and good credit. Otherwise, you have a smaller loan if you have a large amount of debt, a smaller down payment, and poor credit. Simple equation: down payment plus your biggest amount of loan you can get equals how much home you can afford. So your down payment is the total amount of your savings that you're willing to put into this home. If you don't have a down payment, lenders figure that you probably can't afford a home. 3% is required for FHA loan. These are minimums, and conventional loans require 10 to 20%. It has to be your money. It cannot be a loan because then that adds to your debt problems. Some loans will allow you to have gift money. That's money that maybe you got from a relative to be able to use for a down payment. You're going to need to have a paper trail, a letter of explanation where you got this money. Your money should be seasoned. In other words, it needs to be sitting in your bank account for a while. It didn't just show up there magically, 2 days ago. You need to put a bigger down payment will always help. If you can put 20%, you really should do that because you get a better interest rate and you qualify for a bigger loan. So getting your finances in order, we just talked about the down payment, paying down your debt. So high interest credit cards, those are better to pay down more than your auto loan and your student loan. Your credit report is going to affect your interest rate and your ability to get a loan. And the credit report has your credit score, which is the 3-digit rating that shows your ability to pay back a loan over a specific period of time. The scores that they're looking for today are at least 700 or above. These are the things that hurt your credit. Most of them you know. The one you may not know is getting the credit checked by different financial institutions. That includes department stores who are willing to give you 15% off if you apply for their credit card today. So don't open a lot of new accounts. In order to improve your credit, the standard paying your bills on time and keeping your balances low are obvious. This is the one that the credit repair services will offer. Basically, they go to correct any errors. The credit bureau has to take that poor rating off for 30 days while they check it, which of course improves your credit rating. This is what a credit repair service does. I've just saved you a lot of money right there. Letters of explanation are going to be needed for, say, liens that you've paid off or bankruptcies, because that always helps the lenders be more secure in lending you money. How to get a bigger loan: higher monthly income you may not be able to do anything about, but the rest of them you can. Lowering your monthly debt, using a bigger down payment, improving your credit score. Difference between a 15 and 30-year mortgage: obviously monthly payments, they're higher for a 15-year mortgage, so it's easier to qualify for a 30-year mortgage because your payments are going to be lower, and that way you can buy a more expensive home. Bank is your lender. The loan is called a mortgage. Your mortgage payment improves, it includes the principal, which is the amount loaned, plus interest. And the interest is the fee the bank charges for the privilege of lending you money. Conventional loans are normal loans. They come in either fixed rates, so that you know what they are over a period of time, or adjustable rates, which adjust with the national interest rate. A VA loan is an option for veterans that's backed by the government, and an FHA loan is a government-backed loan. You will receive a pre-qualification letter. You will receive a good faith estimate, which estimates your closing cost, which may include the following here: discount points, which enable you to pay down to get a lower interest rate, inspection, appraisals, transfer taxes, title and escrow, insurance. All these things are included in your closing costs. They can be negotiated in the time of the contract, which I'll talk about in my next series. So stay tuned for more videos, and otherwise you can visit southbayrealtypro.com.